This is frequently asked questions about the tax-free cash growth warehouse strategy. Brought to you by SCFSIC. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. This is the truth about infinite banking and the tax-free cash growth warehouse strategy. The few people who've even ever heard of infinite banking want to know, is this for real? And what are the drawbacks or downside? Or is there a downside? Does it take a degree in finance to understand it and put it to practical use? You know, anyone who has an opinion on this or anything else will be at least somewhat biased by what, how much, and how well they know anything about it. And of course, what, if any, interest they have in convincing others one way or the other about it. That said, my wife, Amanda, and I are very much proponents of infinite banking, and we are on a mission to educate people about it. Why? Because we are convinced that combined with the personal sweep strategy and basic cash flow principles, which is what we call the tax-free cash growth warehouse strategy, or TFCGW, this integrated combined group of strategies, this is the most powerful finance strategy in history. So, how well and how much do we know about the infinite banking and TFCGW strategy? I first became acquainted with the concept of infinite banking in 2013 as a second-year life insurance agent. Intrigued by the idea of banking with the cash value of life insurance, I undertook a personal research approach to studying and learning all aspects of infinite banking. One of the first things I learned about infinite banking was that not any policy will work, and that for a whole life policy to be most effective, it needs to be a participating policy with a mutual company, and that it needs to be designed for maximum utility of the cash values. That's really all the average consumer needs to know about the technical aspects. So, no. You don't need a degree or any special learning in order to use infinite banking. I also learned that the proper designs of policies for infinite banking result in the least payoff for the agent selling it. And this is probably the biggest reason why most people haven't heard of infinite banking, because most agents don't want to promote something that pays them the least. Undaunted, I pressed on in my study, and I came to understand how powerful a financial tool this strategy really is. Tax-free compounding growth of cash value certainly is a benefit. But then to be actually able to put the cash to use to buy or finance things without stopping the compounding tax-free growth? Now, that is a huge benefit, especially when you consider that the dividend interest paid to these accounts are many times greater than what any banks are paying. Oh, wait, that growth is guaranteed without losses. And what? There's no obligation to how or when you have to repay any leverage loans? That's unheard of. And I've come to understand all these facets I just mentioned are the most difficult for most people to get their heads wrapped around. There just aren't any other financial vehicles that provide these same advantages. As a result, I believe that is why those who are skeptics are so, because they just don't know enough about it to understand how these advantages can be real. Additionally, there are no penalties, no fees associated with the utilization of the cash values. Add to that, there's the death benefit, which adds financial protection for your loved ones included. And basically, after just about 4 years, that death benefit is free. No other financial instrument can claim all these advantages. And that's not all, folks. The money and the cash value of these policies are completely protected from any outside influences. That is, lawsuits, bankruptcies, collections. Nothing can attach the cash value of a life insurance policy, not even the IRS. And it doesn't affect Medicare, Medicaid, or welfare assistance. So, what are the disadvantages? Is there a downside to all of this? If it can be considered a downside, the only thing I can come up with would be that money doesn't grow on trees. That is, it's not free. You do have to put money into the account in order for it to grow with dividend interest. However, when the account is designed properly, cash value begins to accumulate immediately, and there's no waiting period to be able to leverage it to finance whatever you want. There are no applications or credit checks where certain criteria have to be met in order to be approved for a leverage loan. And as I mentioned earlier, you don't have to obligate yourself to any particular repayment schedule. Your money doesn't become locked up and unusable as it does with CDs, IRAs, and 401ks. There are no maintenance fees as with savings or investment or retirement accounts. You don't lose out on the growing interest, even when you leverage the money to pay for things. My wife and I have been using this strategy for some years now, and I just can't come up with any downside or disadvantage to it. Yes, we keep feeding deposits into our accounts, and we keep using the money to pay bills, to pay our taxes, to go on little vacations, to treat ourselves. And we keep watching our money grow. Eventually, we'll use our accumulated cash reserves to supplement our retirement. Tax-free. Again, we're on a mission to help people with this incredible finance strategy. So if you have questions, we're here to help. Post comments and questions in the comments section, and we will answer them for you. Also, if you like what I've shared here, subscribe to this channel. And to really get a handle on the infinite banking and tax-free cash growth warehouse strategy, watch our free 60-minute TFCGW webinar, How to Become Master of Your Financial World. The link is right below here in the description in the first paragraph. From there, you will be offered the opportunity to become our client. We look forward to talking with you soon. Aloha for now.